Good afternoon, everyone. Welcome to my YouTube channel. My name is Jake Fryman. I'm a realtor with Keller Williams Community Partners in Dayton, Ohio. Each week, I hop on this channel, talk a little bit about what's going on in the real estate industry and the market, and offer some helpful home buying tips and advice for buyers and sellers. So this week, I wanted to talk about the current state of the market, what we're seeing right now, what we're forecasting for the year, how things are going, and also talk about this alleged housing collapse that people are waiting for and why I don't think it's going to happen. So in 2008, you saw there was a big housing market collapse, a lot of foreclosures, a lot of homes went on the market for a very cheap amount, very cheap rates, a lot of availability. People are thinking that's going to happen now. Some people, at least, are thinking that there will be another collapse due to the high prices that we were seeing of homes a few years ago, that's going to come down and cause a collapse in the housing market. And that's not the case this time around. That's not going to happen, which is a good thing. We don't want to see mass foreclosures because that leads to issues in other areas of the economy. So that's not a good thing to really root for. But in any case, I do not see that happening this time around. And I have a few points to explain why exactly we see that as the case this year. So the first thing is the labor market is very strong right now. That's been a big focus right now of the government is to recover from the pandemic and get unemployment back down from where it was a few years ago with all the mass layoffs happening when COVID first broke out. And by and large, we're getting there. There are some industries like the tech industry or some lending companies doing some mass layoffs right now. But by and large, the labor market is strong, and there's not enough workers to go around for all the job openings. So that's good for the economy, and it's good for people too who are making more wages now. In fact, the Fed is trying to lower wages by continuing to raise interest rates. That's a different story for another day. So while the economy is teetering on a recession, maybe we'll see how that goes this year. It might enter into a mid-recession. Unemployment is still very good, though. So the biggest thing going on with the Fed right now is they're just trying to raise interest rates to curb spending and get us back on track financially. But the labor market is strong, which creates a lot of buyers for homes, regardless of what happens with rates. To go on with that, there's less risky loans being issued right now. Back in 2008, we had the issue of loans were being given out left and right. There was not a ton of regulation in the industry. If you had a pulse, you got a loan. Well, that led to the collapse because people who couldn't make their payments and shouldn't have gotten a loan in the first place were foreclosed on. They couldn't keep up with their payments, and that led to a bunch of issues that we saw with that housing market collapse. The government kind of saw that as the issue, so they passed the Dodd-Frank Act. I think that was 2010, 2012, whenever that was passed. Really put a lot more regulations on the lending industry. So, now you've got to sign a lot more paperwork, fill out a lot more paperwork, disclose a lot more things, but it keeps the housing market strong and stable, and that's what we're looking for here. So you're going to see a lot less foreclosures this time around, and a lot more guaranteed loans, a lot safer loans being issued by lenders, and a lot more rules that they have to follow as well. You did not see that in 2008, and that's what contributed really to the housing market collapse that year. If you want to watch a good film about that, The Big Short, starring Steve Carell and Christian Bale, that's a great movie. It talks a lot about what happened with the housing market collapse that year and how lenders were not totally regulated, how the government kind of let it happen. So, and then we've seen in subsequent years how they have gone about fixing those issues and keeping things where they should be now. And that has really made the housing market more stable to avoid future collapse. To go along with that, there's a shortage in inventory, as I mentioned. Kind of an inverse problem what happened in 2008. In 2008, there were a ton of homes available in the preceding years as well. Builders were making almost too many homes, and then when the foreclosures happened, a bunch of homes hit the market then because they're available. We'll see less foreclosures this time around. We'll see a lot less of that. So there's not enough homes to go around. Now, that's a separate issue for the real estate market, that there's not enough houses to go around. But for this particular topic of will there be a big housing market collapse, I don't think so, because there's not enough homes to go around already. So that's really tightened the market and tightened competition, which is good then for buyers and good for sellers and good for the economy. But it does create an issue then of shortage of housing. But that also means that there will not be a collapse as well. Builders are not able to keep up right now with demand. A few things with that, shortage of workers, as we mentioned, they can't find enough workers to get these homes built. Supply chain issues, the cost of materials, all that stuff is building up to where they just are not able to meet the demand right now for the housing market, which leads to the shortage. But it also means that we won't see a mass foreclosure with a lot of available homes in a few years. And then kind of the last point is there's a big low right now in foreclosure rates and delinquencies. People are able to make their payments on time. They're not defaulting on their loans. They're not behind, anything like that, because we have more stringent lending regulations now, so they're able to keep up with making sure that only people who are qualified should be getting these loans, and that they're not just handing them out left and right to folks with a pulse right now. So because of all of that, you're not going to see the same thing that we saw in 2008 where There were just mass foreclosures, which is good for the economy. We don't want to see that. But it does mean that there's an issue then as far as housing availability goes. So a lot of people are saying, well, I'm going to wait until housing prices come down and there's a big market crash. I think housing prices will stabilize, and I think that things will even out, but you're not going to see a big crash like you did a few years ago where there's mass foreclosures, a bunch of foreclosed homes hitting the market for a very cheap, discounted rate. You're not going to see that this time around. It'll be a little bit different, and I think there will be some lowering of prices as well, a little bit of stabilization, but with demand being so high at the moment, and with availability, inventory being still low and just not being able to keep up, it's not the same situation that we saw 15 years ago with that housing market collapse. So don't hitch your wagon to that hope that you'll see a big collapse and then you can jump on buying a house, because it's not cyclical like that. There's a different, the situation is different each time. There might be a bit of a recession this year, yes, and we will see some layoffs, some changes in that regard, which is kind of the design of what the Fed's doing right now with rates. But rates will likely stabilize as the year goes on. Housing prices will stabilize as well, and you won't see the same competition and overlisting selling demand that you saw a couple years ago. It'll kind of slow down and even out, but don't expect housing prices to collapse at a significant rate. It just won't be the same. So hopefully this was helpful. Hopefully this kind of gives you some insight going into the year about what your plan as far as buying or selling goes. Always a good time to buy, start building up that equity if the rate and the price makes sense to you, but don't count on another global economic event to help you get your house. Instead, just call your agent, talk to a lender, talk to professionals in the industry, and see what they can do to help you get in your home immediately and start building up your wealth. Thank you. I'll talk to y'all next week. Take care.